What's going on? What's going on, Anthony? Hi, Elijah.
What's up, Marlon?
All right.
Trying to get
Yeah,
some work done. It's so hot out there.
yeah, they say it's in the 90s. I haven't been outside, so
Fortune.
yeah. Did you get that wall built? You said you had to do a wall.
Yeah, I got it up to where I want it. I still got like a little bit more to build, but it's pretty much ready to go. I got to go get the gravel now.
Okay.
I'm out there trying to open up our pool, and I'm cutting up the old logs, and the mugs is real thick, so tearing my hands up.
Okay. You got a saw or you doing it with an axe?
I'm doing it with Sawzall.
Oh, okay. All right.
Still tearing my hands up because they like 8 inches wide.
Woo. Well, I know Andrew's coming in and it may be a few other people coming in. I'm going to wait for about a minute or so, 2 minutes or so, and then we'll go ahead and get started.
What you gonna discuss today?
Well, we're going to do a little bit of review for the new folks, and then we're going to talk about that, what you and I had talked about, using earnings reports
Yeah.
to get ahead of the game, and and basically how we identify stocks during the trading day, utilizing FinViz and watch list and all this kind of stuff. So
Okay.
I'm going to always be in a habit of reviewing some old stuff because we're going to have new people that are going to come in.
Yeah.
And some people, they don't trade like us. So you have to keep reinforcing some of these
Mm.
major points. So, as a matter of fact, let me open up.
Sound like somebody just joined.
Yeah, looks like we got a few other people coming in. Um, Andrew just checked in. Got one other person. I don't know who that is. I see you, Andrew. I see you. Okay, that's okay, let's go ahead and get started. This, don't pay attention to, well, ideally, this probably should have been, no, I take that back. This is where we're going to start, but this is really has to do with how to trade penny stocks, which by, and we're going to talk about those. I'm going to focus on ones that are under $1, but by definition, the SEC defines a penny stock as stocks that are generally under $5. Okay. So you're gonna, depending on the brokers that you have, they may even have other definitions for what they classify as penny stocks. But today we're going to focus on stocks that are under $1. And this is for folks that really have very small trading accounts. But for even for some of those some of us that have larger accounts, these may still be good opportunities to get some real good gains, okay? But you're gonna have to do your homework. You just can't wake up and say, hey, I'm gonna get into this particular stock because I've heard some news. You don't do your homework and you aren't prepared, you are most likely going to lose money, okay? So for the agenda today, we're going to do a couple of things. I'm always going to do some review, um, but the agenda today is going to be understanding catalysts, exploring types of catalysts, identifying potential and market trends, in-case in-depth case studies. We're not really going to do any of those. Risk management techniques, strategies for maximizing profit, and then analyzing performance matrix. Let me make sure this is the okay. All right. Understanding catalyst. The catalyst that we're talking about really has to do with news reports. And there are many catalysts, of course, but the ones that are going to be the most important are going to be earnings reports, okay? And then depending upon what sector or industry you're in, there may be other catalysts such as partnerships. We're talking about micro cap stocks more than anything else. There are going to be partnerships with larger market cap companies that are more well known. We're going to be talking about biotechnology stocks that are inventing novel therapies and other types of and medical devices for patient health. Cancer research may be one. As an example, these biotechnology stocks are using very novel technologies outside of chemicals in order to provide health interventions, okay, for diseases and things of that nature. Some of us are familiar with some of those novel therapies because of COVID. Okay, as an example, with the COVID, some of the COVID vaccines, I'm more familiar with Moderna. They were actually using your own cells to create the spike protein, which was resident on the envelope of the coronavirus, so that your body would develop immunities to that particular disease should you were to get the disease. Your body would already be familiar with the spike protein, which was resident on the disease, on the coronavirus, the SARS S1V, whatever they named that. They had a scientific name for it, of course. So these are what I mean by novel therapies, where we actually, instead of using chemicals, we're using the human binome as an example for the body so that the body creates its own immunity, say for example, or that your body directs its own cells to say attack cancer cells for as an example. Okay, so for us, um, I'll tell you another catalyst which has been pretty big is some of these companies are actually purchasing crypto. And for some reason or another, that I'm not really a crypto person, but it seems like some of these stocks are really seeing price action and people are making significant profits just by a company announcing that it is accumulating crypto assets. Okay. All right. So catalysts are pivotal events. Those are some examples. Are pivotal events or information influencing stock prices. For stock price, for stocks priced under $1, these catalysts can trigger significant price shifts, providing rapid gains opportunities for astute investors. Catalysts may include earnings report, product launches, market news, or regulatory changes impacting the stock market vigorously. Now, if you understand math, you understand that the smaller the price is, it doesn't take a large price increase to see a significant percentage increase in profits, but it works both ways, right? I want you to imagine that that price can move even a small price change in the opposite direction, i.e., the price falls, that could represent a large percentage change, okay? So when we're talking about penny stocks, I need you to realize that it can work in either direction. A small change could be a big gain percentage wise, or it could be a large loss percentage wise as well. So, but if we use our trading strategy, which I'm going to touch on in this forum, then and we do our homework, we can put ourselves in a good potential with a small account to make pretty large profits and grow that small account into a large account. Okay, I'm not going to harp too much on this because we're going to give more examples. These are just some types, company news. Earnings reports are going to be my focus today, although I'm going to talk about the a way that you can find stocks, not necessarily penny stocks. They're mainly going to be penny stocks, but there'll be other stocks as well that are going to act on company news, okay, that you can find inside of your trading platform, that you can find on through internet searches, and we'll talk about that uh, in a second here. Okay, we're going to do some research, and folks, I'm going to have to hold up a minute here. I'm not sure. I actually created a couple of. No, this is the. Let me see if this is the one that. Yeah, this is it. Okay. I actually created a couple of these, and I wasn't sure if I had saved the right one. And anytime you guys have questions, just stop me and ask questions. If it's something that I've said that you don't understand, or if I have misspoken, which I will do at times, uh, somebody please alert me to that. I don't want to give you guys any wrong information, okay? Identifying potential. I'm pretty much going to show you how to do this, or at least how I do it. I'm not saying that there are not other ways to do it. I'm just going to tell you with the ways that I am familiar with doing particular things. This was actually, give you full disclosure, this was actually generated using this uh, PowerPoint was actually generated utilizing, I think, something similar to Chat GPT. I have made some revisions in some areas to conform with the way that I do it. But just know, just full disclosure is that this presentation I actually created with Chat GPT. So identifying potential, delving into company financials. You know, these earnings reports, you can either go to their websites, you can find the company, you can go to its websites, and normally they're going to have a section or a page called SEC filings or financial filings or something like that. And if you're into that, you can look at all of the fundamentals for a particular company. When you hear that word fundamentals, just know that you are talking about the financials of a particular company, okay? Some people are fundamental investors, which means that they want to look at the annual reports that are reported and that are required to be reported to the Securities and Exchange Commission. Okay. Of course, there are websites, all kinds of websites that you can go to that will give you all kinds of information on a company and actually recommend and recommendations. Are you going to find penny stocks listed at these websites? These the ones that are where you have to pay for subscriptions? Probably not. Okay, they're generally not going to follow penny stocks because they are
No.
too volatile. Okay, they are too volatile, meaning that the prices can change very quickly. There may not be much liquidity. In other words, there's not a lot of people trading these stocks. or there are not a lot of shares available for trading to the public. You're going to hear terms like float. So when you hear that term float, as opposed to shares outstanding, the shares outstanding are no are the shares are the total number of shares that the company has issued to insiders. Those are people that are employees or directors within a particular company. They could be institutional holders, hedge funds, or what have you. They could be warrants, i.e., these are warrants are devices which gives a the holder of the warrant the opportunity to convert, say, bonds, for example, into common shares of stocks. Okay, there's other mechanisms for that, but those, when you hear that term shares outstanding, those are some examples of what we're talking about. As opposed to float, those are the number of shares that are available to the public for trading. Okay. In other words, they're going to exclude the institutional owners, such as the CEO, the board of directors, the CFO, and any other employees that may own shares in a particular company. Okay, it's going to exclude the institutional holders, the mutual funds, and it'll just be those available to the retail investors like you and I. Okay, and these are, like I said before, earnings reports are the ones that are really important to me, because what it allows me, for example, and I'll use myself as an example, it allows me to get in on a particular company before the public does. Okay. I can look up earnings report date. It'll normally be sometime in the future, and that I can buy shares ahead of time. And then when the earnings reports come out, I'll be there in front of my computer and I'll wait for that price to go up. Now, is it necessarily always going to move in the direction that I expect it to move, or will it move at all? I don't know that. But from my standpoint, the risk versus reward is worth it. Okay. I'm myself willing to invest $1,000 in a penny stock because, like I say, the value, the potential for profit is normally going to be very great. Sometimes around 100%, 200%, 300%, even 50% is going to be pretty good. Now, let's be realistic. Even 25% is going to be good. If you invest $1,000 and you have the potential to make $250, then that's pretty good. Especially if you're going to do it in one day. If we're going to annualize that, that 200 and that 25% is going to be far greater than what you would get on a typical, say, large cap stock, or even one of these tech stocks. You're not going to get, and I don't know what annualized, what 25% would be, but I would imagine it's going to be 1,000-fold or more. Okay. News impacts, say, for example, biotechnology would be an example. Let's say there are some biotechnology stocks that are in where the company is engaged in human research. Okay, so in other words, they may be investigating a cancer therapy of some type. Okay, and there may be some positive news come out, i.e., such as the legions of cancer cells on someone's cells were removed via some intervention, and that after a 4-month follow-up, the legions are still no longer there, And news like that may drive a stock price up 100-fold or more. Regulatory changes, crypto is an example. President Trump is come out and made some news about crypto and Bitcoin, and those stocks have moved up. And the companies that engage in crypto mining, the companies that fintech companies that engage in crypto or that pay interest on crypto holdings, those companies may go up because of some type of regulation that the federal government has issued. So those would be an example of regulatory changes, okay? These are all examples of catalyst. Case studies, there are a lot of startup companies and tech startups are the ones, to be honest with you, that are really interest me. Say, for example, quantum computing companies. Those are big deals for me. Biotech are really big deals for me, so much so that I've signed up with and I can't remember what it's called. I can look it up, but it has to do with the FDA. It's the FDA tracker, and it lets me know, it alerts me to when news has come out about biotechnology companies that are about to report or that have reported some positive results via some research or some drugs or some patents or things of that nature, okay? Retail sector too, that's especially the retail sector is good, especially the retail sector that is highly dependent upon the internet. We can see some of those have great performance too. But these biotechnology and tech, though, I really get excited, especially about the biotech and then the technology in general. I really get excited about those. Risk management. Let me say this. You can say many things about risk management, but here's what I've come to realize. I don't want people say, well, it's a casino. And to an extent, it is. I'm talking about investing in the stock market. Some people say it's just a huge casino. Okay. And you're going to see all kinds of strategies for investing in the stock market, all kinds of strategies for that. But what I've come to realize is that I'd rather watch with my own eyes what a stock price is doing versus leaving it to chance. Okay, in other words, I want to be sitting in front of a computer. I want to have a chart up of a particular stock, and I want to watch the price go up, and I'm going to buy as the price is moving up. And once I see that the price is beginning to fall, I'm going to sell. Okay, I've disabused myself of the notion of utilizing what they call support and resistance. I've utilized that approach. It doesn't work. I've lost money. I've held stocks for more than a day, utilizing strategies that so-called experts have pontificated, and I've lost money that way. It is better for me. You may see something different, but it is better for me to be able to see with my eyes what the price is doing, okay? And risk management, in other words, if I see that I'm about to lose money or if I'm losing money, I'm going to sell, okay? That to me is the best way to ensure that your loss is minimized. So when you hear this word risk management, what is your potential profit versus your potential loss? Okay. It also, notice here, they say continuous monitoring. Based on what I've just said, I'm watching it with my own eyes. Okay. Diversification. That's important too. We don't want to just focus on one. Diversification means you want to invest in companies across sectors, across industries, across indices. Like you may want to invest part of your money in Dow Jones companies, companies that are listed in the Dow 30, companies that are listed in the Standards and Poor's. You may want to invest in small caps, companies that are listed in the Russell 2000, Russell 5000, or what have you. There's different indices and there are different criteria to be listed in each one of those industries. Dow 30, those are going to be your largest market cap companies, okay? Those are ones that are going to have very strong financial positions, large assets, very large market caps, okay? What do we mean by market cap? We're looking at the price of a share, of one share, times the number of shares outstanding will determine your market cap. NVIDIA will have a very large market cap. Apple will have a very large market cap. These are just some examples of companies with very large market caps. Generally, the companies that have been around for a very long time, they may have large market caps as well. All right. Let me slow down. I want to do a little bit. Well, let me get through this and then I'll do a little bit of, I'll tell you what, I'm going to go through this. This is pretty much the strategy that I recommend. And I'm going to do a little bit of review as I'll talk about this, okay? So the criteria for criteria selection. I only want to deal with NASDAQ listed penny stocks only. No over-the-counter stocks, e.g. no pink slips. Okay? I'm going to stop right here and I'm going to open up my platform. I'm going to show you what I mean by that. So I want you guys to see what I'm talking about so there's no guessing about it. Bear with me here. Anyone have any questions as we wait for my platform to open up? Now, Elijah, do you have any questions? Oh, yeah, hold up. Let me, okay, notice I use Thinkorswim, which is a trading platform, and it is linked to Charles Schwab. So Charles Schwab is my broker, okay? And I want to point to this down here, live trading, which is the one I'm mainly going to use. This is going to be real money as opposed to paper money. Let's say if you wanted to learn how to trade, all you need to do is click this tab, paper money, and then log in. Of course, you have to have an account. In this case, with Charles Schwab, you can only use Thinkorswim with Charles Schwab, as far as I know. And during the trading day, which is going to be 9:30 a.m. to 4 p.m., you can trade. It'll be an active market, historical data, but you're going to use fake money. Okay? Live trading, you'll go here. I also want to point out this little gear right here. You can click on that. And really the point I want to use now, if you have a fast computer, if you have a lot of RAM on your computer, you can update these settings. The minimum setting, you don't need to set that, but I want you to notice I only have computers that have powerful processing and have a lot of RAM. So here I'm setting mine on over 6144, and that's going to be in megabytes. Okay, so that's going to be in when it's all said and done, it's going to be in gigabytes. Okay, I want to make sure that I have the processing power I need to get in and execute these trades quickly. Okay. All right, so I'm going to go ahead. I'm going to cancel that. I just wanted to point that out to you. Let's see if I always save my passwords here so I don't have to. So we're going to log in. Okay, so I'm actually inside of the platform. Up here, you can see, let me point this out here. Here's a watch list, and this is a drop-down menu. If I click this, you can go down here to where it says top 10, and each morning, I'm going to choose top 10% gain NASDAQ. And of course, since it's not a trading day, nothing's going to come up. This is probably information from the last trading day. I'm not interested in that. Okay. Each morning, pre-market. Now, let me explain. We now have the privilege of being able to trade pre-market. Pre-market trading hours are from 7 a.m. to 9:25 a.m. That's Eastern Standard Time. Okay? I'm going to say that again. The pre-market is from 7 a.m. each trading day till 9:25 a.m. each trading day. That's Eastern Standard Time. The regular market hours are from 9:30 to 4 p.m. And then the aftermarket hours are from 4:05 p.m. to 8 p.m. So you have the opportunity to trade 3 different periods each day. For those of you that work during the regular day, you have the opportunity to trade both pre-market and aftermarket if you cannot trade during the normal hours. You cannot trade options during those times. Okay, you can only trade options during the regular market. Okay, also during those pre-market and aftermarket hours, you can only do limit orders. You cannot execute market orders. So if your trades get rejected, it may be because you attempted a market order and not a limit order. Okay. A limit order, you're basically saying, I only want to buy at this price or I only want to sell at this price. A market order is the price available at that time, the best price available at that time, and you get what you get. Okay? It could be below what you had intended to buy. Let's say if you're in a position to buy, it could be below that, or it could be above that. You don't know what you're going to get when you attempt a market order, okay? You also cannot do one cancels other orders. Or in other words, you cannot combine orders such as a profit limit order and a loss stop order. You cannot do combination orders during the pre-market or the aftermarket. You can only do one order at a time, i.e. a buy order, or that's an order to, that's buy, what we call buy to open is the term that you'll normally see. Here you can see the green represents a buy. It's to open. In other words, I'll open a position or to close. The red represents sales. So you can see I'll do a lot of buying and selling during the day. So I buy, that means I don't own any shares, and I can buy, that's an open order, buy to open, and then to close that order, I have to sell. Okay? But here's one of the ways that you can identify penny stocks. And here you can see by definition, there's only a few here. This could be one. Lucy is up under $5. Here's one up under $5. So there are a couple here that are under $5. Now, here's the percentage change. Watch this. Here's why you should be excited. Look at the percentages. I normally don't pay attention to these because these, when you see them over 1,000%, 800 or so percent, they're normally going to be because of what we refer to as a reverse split. Okay. In other words, companies that do reverse splits, they are normally in a position where they're going to be delisted from the NASDAQ. If you fall, if the price of a share falls below $1, you have you're probably going to get a letter from the SEC to make some type of improvement. Okay. So typically what companies will do is they'll do what's called a reverse stock split. Let's say if you own, and my math may not be right because I'm going to do this in my head. Let's say if you own 100 shares and they do a reverse stock split 1 to 10. And normally that's how you'll see it. You'll see the small number in the front, the large number in the back, or they'll just say reverse stock split. So for every 1 share you had, you now have 10. Okay. Let me make sure I'm getting that right. For every 10 shares, I said that backwards. For every 10 shares you now have 1. But what will happen, the value will be the same. So just you have less shares, but the price of each share will go up by a factor of 10. Does that make sense? You have less shares, but the price goes up. Therefore, you don't have, that company does not have to worry about being delisted because they've now, the price per share is now above $1. Okay. So this is why these calculations get skewed. Let's say, for example, we can go to charts and I can prove it to you. Let's go ahead and I can link this, by the way, for people that like to link stuff. Here I can see I have a link in yellow. I could link this in yellow as well. I don't want QBTS though. I want one of these. Let's do this one at the top. And you can see it's now listed up here. Over here I have live news. And you can see I've already have live news shows up. And I can go through here and I guarantee you I can see where I can find, my guess is, and here it is, sure enough. Let me click on it. Here's a reverse stock split. Name of this company, I guess, is 22nd Century Group, authorized 1 for 23 reverse stock split, reverse stock split to restore NASDAQ listing compliance. Okay. Don't pay any attention to these. Go down to the one that has, like this one may be a good one. I'm not sure, but that's why you got to look at the news. Well, they did it. Looks like they did a reverse stock split as well. Those ones that are real high, it's not always the case though. Sometimes just the catalyst, hey, they'll jump up. Here's one that's probably not a reverse stock split. Let's look at that one. And like I said, you just go down. You always want to look at the news. Straight away, I don't see anything about that. Now, but here's one thing I see though that you got to pay attention to with what I'm discussing today. In other words, we're going to take advantage of what we call momentum. That's price momentum. Let's look at the chart so you can see, get an idea of what I mean by price momentum. We're going to make it very clear what's happening. I'm going to magnify these shares. Let's close up some of this stuff here so we can actually see. Let me close some of these windows so we can see. I'm on a daily chart. So each candle, let's minimize it. You don't want it to be, I went the wrong way. Let's minimize it. So this is the chart for 1 year. Okay. Now this company's had a low price of 22 cents. It's been as high as $6. Okay, this is what I mean by momentum. Something happened. Look at these candles here. Prior to, let's look at this one right here, which occurred on May the 9th. Let me enlarge it just a little bit. And you can see these candles here. Look how small this is. Let's make this, in terms of height, when I say small, I'm really talking about height. Let's make it a little bit larger. And even as I make it larger, you can see that the candle really has no height to it. But that's okay. We can look here. Now you guys as I put my cursor on here, I can see this is May 8th, the day before we had this huge price increase. Let's see what the price was. According to this, the price was around, and I'm looking to the price axis over here. This was somewhere around 28 cents. And then on the next day, it went from 28 cents or so all the way up to as high as $2.85. It closed that day at around $2.39. Okay, this is where you're going to make your money at. But ideally, what you want to do is get in down at the bottom. This is where your homework is going to come in. Okay, now a little bit of review. Since I'm on this, there's a couple of things that are important. Here's the ticker. What I mean by ticker, the ticker, it's just a bunch of numbers or letters abbreviated that's going to represent the name of the company, which is Next Technology Holdings. Here you can see the current price as of the close of market. That would have been on Friday. We can see that that company closed up $2.11. They also give you the percentage. That's from the previous close. Okay. That would have been the 8th, right? Oh, excuse me, not the 8th. This would have been, this close right here would have been June 20th. Here we have the dates. We have the opening price, i.e., for each candle. Since we're on the daily, this is what the price opened at. This was the highest price for that day. This was the lowest price. That's what the L represents. This is the closing price at the end of the day. And this is the range, which is the difference between the highest price and the lowest price. And the Y is just the vertical axis. Wherever you are vertically, that's going to give you the price, okay? So at this height right here, we're at, it says Y, $3.91, okay? That's for this candle right here. Is the only one that's been as high as $3.91. This is what you call a candle. When the candle is green, that means the price started low and it ended up high. So it opened at this price, it closed at this price, it went as high as the tip of this, what we call a wick. Here it has a very small wick, so the difference between...
What symbol is that?
Huh?
What symbol is that? What the stock symbol is that?
This is NXTT.
Oh, okay.
Which is right here. Okay. Name of the company is Next Technology Holding. Here's the price that it closed at on June 20th, which would have been Friday. Here's the change from the previous day, i.e. from Thursday to the close of Thursday to the close of Friday. The price went up $2.11, which represented 158% gain. So we would have made a whole lot of money on this particular stock had we done our homework and either got in before the stock went up, or we acted very quickly when we found out that this was a mover for today. And normally you're going to find that out down here with the news, what we call our catalyst. But listen, the best time to do this is going to be pre-market or after market. During the market, yeah, you can do it, but you have to be at your computer, and some kind of way you have to check and check often to see if a stock has made a move due to some catalyst, with the hopes that you can get in, not up here, but down here at the bottom, okay? And then we want to follow it using the indicators prescribed in our previous videos. I'll talk about that later, okay? Can anybody see how you can make a lot of money with what I call, or what are called, momentum stocks that operate? And when I say momentum, I'm talking about price momentum, okay? These candles are for each day. So at the beginning of the day, 9:30, this is where the stock price was. At 4 p.m., this is where it was. Now, inversely, here's a red candle. At the top, 9:30, this is where the price was. At 4 p.m., this is where the price was. You made money on this day, you lost money on the day after, and then the second day after, the third day after. And this is why, watch this, this is why you want to watch the stocks, and you do not want to anticipate what it will do the next day. A lot of people will think that, ooh, it went up on day one, maybe it's going to go up on day two. As you can see, it did. But I can guarantee this, you better be in front of that computer, and you better be able to take advantage of the fact that it started somewhere around $2.39, and the next day market open, it was $4. It was around $4. You could have made a lot of money, but let's say if you bought on this day and you held it, and the next day you go to your computer at, well, in this case, you would have still made some money, right? You would have lost some, but if you bought on this day and you sold on the second day, you would have still made money because of this gap. That gap is somewhere around, what's that, 237 to around 323. So whatever the difference is between 237, that's probably around 80 to 90 cents. So I'm just guessing, somewhere around 80 to 90 cents per share. You would have still made money. But my point is this: you do not want to guess, because many times you'll have this, and then these candles will drop. They'll be down here, which means that anything that you potentially gained, you lost it all. Okay? Any questions on that?
Yeah, I got a question.
Go ahead.
Which one of your studies started you to your RSI? Which one of your studies got you involved into buying this particular stock? Because I'm looking at it and I don't see. I see where one is the RSI is over, but which one would start you which one would gain your interest in the studies that you have attached to this chart?
Okay, let's start from the beginning and talk about what we're talking about right now. Right now, I am only instructing on how to identify stocks that have the potential to earn you money and big gains. We have not talked about what the strategy is to make sure that we get those gains. Right now, I'm just showing you an example of how you can identify potential stocks with small um, prices, low prices, and normally small market caps that you can make money from. Okay? I.e., let's go back to where we started. We could utilize, let's say, as an example, I'm in front of my computer every morning. It's at least by 7 a.m. Sometimes early. I'm up doing my research. I'll get up at 6 o'clock sometimes, and I'll do some research to find out if there are stocks that have the potential to earn me some money. And this is one of the things I'll do. I'll go here to my watch list. I'll drop down this here. I'll go to top 10, and I'll go to top 10% gain NASDAQ. Okay? There's another thing I'll do. There's all kinds of ways to do it inside Thinkorswim. And one of the reasons I like it now, Anthony and I, this is what we do. We go to MarketWatch, and they have a calendar. Now, look, these are the stocks that are coming out tomorrow, which is Monday. They're going to give you a calendar for the whole week. And what we will do at normally end of day, after trading is over, we'll come to MarketWatch calendar, and all these tickers, I'm going to pull them up in a chart. I'm going to make sure the price is feasible to me. I'm not going to choose stocks that are, I'll normally go, to be honest with you, I'll normally do stocks that below $2. Ideally, I'm looking for ones that are below $1, but I'll do as much as $1. So let's say this is T. Let's go to Monday. This one's actually, I think, an ETF, so I wouldn't look at that one. But let's do this one, NPSNY. Let's put that in there, NPSNY. Now, I'm not even going to go there. Look, the price is $58. I can't get that many shares because I'm going to invest for me. Now, for you, it's you have to determine this, but for this strategy that I'm talking about, I'll invest like $1,000. I won't invest any more than $1,000. And the reason I choose 1,000 because I know that I can make 1,000 in a day real quick. Okay, so I'm willing to lose at least a 1 day profit of $1,000. Actually, I know I can make 2,000. So 1,000, I'm willing to risk 10,000. Excuse me, 1,000 on the hopes that I can get these kind of returns right here, 39%, almost 42%, 50%, 158%. Okay? In other words, the risk is worth the reward. Now, does that mean I'm going to lose $1,000? Of course not. Okay? It is typically not the case that a stock price is going to go from $1 to $0. Okay? Now, if we can get it here, it'll probably just go back to where it started. Or in this case, we can see that it drops. And we know that there's something called, in mathematics, called reversion to the mean. These are the mean is the average price. These are my averages. And we can see that the price, look here, is reverting or coming back to the mean or the average. We can always expect to see that. A stock will go away from the mean, and then it will come back to the mean. So if we know that, we can look at a chart and say, well, okay, this stock, man, has really moved away from the mean. That's when we want to be in on it, i.e. when we want to be a buyer. But whatever goes up, look what happens. Always comes back down, doesn't it? We call that reversion to the mean. And I don't care what kind of company it is. Let's choose a company that's a big deal. Let's choose NVIDIA, NVDA. And everybody's big on this one, even though it hasn't made a breakout yet. I got a little bit too much stuff up here. Let me magnify. Let me reduce some of this stuff here. Now, this is the chart. This is a daily chart for a full year. These are my average. This is my 200-day average, the blue one. This is my 50-day average. This is my 20-day average, the green one. And this is my 10-day average. Okay? Now, this ought to make sense. This is the faster average. It's 10 days, i.e. 10 candles. This is the 20-day. That's 20 candles. These are your candles. That's a 50-day. That's the last 50 candles. And this is the last 200 candles. Of course, I want to see the more recent price changes on the top. So the white line, the 10-period average, should be above the 20. The 20 should be above the 50. And the 50 should be above the 200. Otherwise, I'm not touching it unless I know that I wouldn't invest in it. That does not mean that I will not trade it in order to take advantage of price changes during the day. Okay? But here I can see that the price moved away from the average. Forget that little pink line. That's something I include that lets me know the value of a stock. So don't pay attention. Well, as a matter of fact, let me hide that one. I'm gonna go up here to edit studies. And this is what we call it volume weighted average price. Volume weighted average price allows me to identify whether the price at a particular day is overvalued or undervalued. But for now, I'm going to hide it. So sometimes we can put too much information here that sort of obscures what we're doing. I'm also going to have this hide this Fibonacci. So I'm going to say remove drawing, and it goes away. Because I want you to see here during May, the early part of May, from about May 9th to about May 16th, here I can see that we had a lot of upward price momentum. See how the candles, and since these are green candles, that means that the buyers had more conviction than the sellers. And look at the price move away from the average. Remember, it's the top of the candle that is the closing price for that day. And look how it moves away from the averages. But then look what happens. It comes back toward the average, moves away again, comes back. Now it's above the average. When the candles are above the average, you can see that there's an uptrend. When the candles are below the average, you can see that we're in the downtrend. I'm going to say that again. That is very important. It is typically the case where it's an indication to buy. If the candles are above the average, we know we're in an uptrend. If the candles are below the average, we know we're in a downtrend. We generally do not want to be buyers if we're in a downtrend. Does that make sense?
Yep.
You can also see down here, this company gives dividends. It's not that much. Don't think you're going to get rich off of NVIDIA with their dividends. That's 1 cent per share. That's a joke. Here's the conference calls where the earnings are going to come out. Here we can see that the analyst estimated that the earnings for NVIDIA, and this earnings was on May 28th of this year. It was during the market, 3:20 p.m. Well, this was actually after market because this is given Central Time. So that would have been 4:20 Eastern Standard Time. The analyst estimated 82 cents per share. NVIDIA actually came in at 81%. So they were a little bit under, but I can guarantee you their forward guidance. In other words, they're going to give you the earnings and the revenues and some other financial data from the last quarter. Okay, and I don't know what their quarters are, but it would have been prior to, what date was that again? It would have been prior to May 28th of this year. Okay, but as you can see, they didn't give us the revenues, by the way, so you'd have to do a deeper dive into that. They only gave us the earnings per share, what they call EPS. If you ever see that acronym EPS, that is earnings per share. Does that make sense?
Yeah.
All that means is they'll take the net profits divided by the shares outstanding, and you'll get the earnings and profits. They're the same thing. Those words mean the same thing. Okay. So evidently, some of that guidance that they gave, they'll give their actual numbers for the last report, and then they'll give what is called future guidance. In other words, they'll say, okay, for 2026, we expect our revenues to be this amount, and generally it'll be more than the previous amount. And they'll give the same thing for their earnings. They'll say we expect our earnings to go up, and then of course they'll give if any new product updates are coming out, any partnerships, things of that nature, any kind of regulations that may reinforce guidance, they'll give that. So we can see that after that earnings report, the price went up. Let's see if there's an earnings report. Here's one. We can see that there was an earnings report that was given in February. Now here we can see that they actually beat earnings. Here they had the analysts estimated 79 cent. They actually had 89 cent. But it was something else given now, because we can see that the stock price went down. I got an idea what it was. This was probably around the time that I'm trying to think, it was a Chinese company that came out with some AI that would compete with our AI, some kind of chat bot. Anybody remember the name of that one? Andrew, you remember that? It was some chatbot that the Chinese AI chatbot that the Chinese had developed that was far cheaper than what we had developed here in the States, and it drove the AI companies crazy. Oh, because we were talking about building these huge data centers, and NVIDIA, you're going to pay a whole lot of money for their chips in the tens of thousands of dollars, and they were thinking that this Chinese developed AI learning model was a whole lot cheaper than the models that we had here, and it sent the AI stocks tumbling. Okay, they've since recovered, as you can see. So these will just give you some idea of how companies are doing, but they do not give you the full picture. Okay. There's also a scan that you can do. And you can put in stock price, like you can put in, go in here and you can put in the closing price, the asking price, the bid. Normally you put in the close, and you could set up a minimum. You could say a max, say for example, and you set your own criteria. Let's say $5, and let's say no minimum. Let's just do that and see. And it's not a trading day, so I don't know what's going to happen with this. It's not. I didn't get any symbols. Let's see if I can close some of this other stuff up. So I don't know what I don't want to waste time with the criteria. That's volume. Let's skip volume too. Let's just see if we can get anything with the closing price. Okay. So you can see here's These are definitely penny stocks. These are the tickers. But of course, you're going to have to do your own research, right? You can go out and say, well, when are the earnings? Let's choose this one. Let's see if, and I don't see how I can link this, but let's go over here to charts AABB. Let's go over here to AABB. And here you can see it's been as high as what? A little bit close to 7 cents. It's been as low as 1 cent. Now, here's what I mean by I wouldn't trade this one. This is why I wouldn't trade it. Look, this is OTC. OTC stands for over the counter. I'm not going to trade this one. I only want to trade those that say NASDAQ. So I'll go back. Let's choose another one. We'll go to our scan. Here's let's choose one that's not as low as it's practically worth nothing. Let's choose this one. How about this one? AAFRF. AAFRF. Okay, it's over the counter too. I don't want to trade that. If it's NASDAQ, I know it's regulated by the SEC. These companies here do not undergo the scrutiny that NASDAQ related stocks go through. So let's choose, how about this one? How about ABAT? Let's try that one. Okay, that one says NASDAQ, so this one has potential. Here's what I mean. Look, something happened here, and we can look up live news now to tell us, look at that, that stock jumped on some type of news. It went away from the average, right? The mean. But look what happens. When it goes up, always come down. We call it, in mathematics, we call it reversion to the mean. In other words, coming back to the averages. And look at the fast average, the 10 period. Man, that price was dropping. The average 10-day price dropped below the average 20-day price. 20-day price was below the 50-day, and the 50-day price was below the 200-day. We don't want to be in a position like that for investment unless we're trying to take advantage of what we call range. Like here, for example, and you guys won't see this, I'm looking up here where the range is going to be given, but I'll put my cursor on this candle, and here I had a range of 22 cents for a stock that opened at $1.01. That's almost, if I could have got it at the open and bought it at $1.01 or $1, which would have been the low, and sold it at its high for the day, which was $1.22. That's easy math, right? I would have made 22% on that day. I hope you guys now see the advantages of being able to participate with stocks that are very low value. Let's see what the trading value was on that day. Here we have the volume charts, and of course we want the liquidity to be there. In other words, we want to see a lot of people trading on that day. On that day, we had 7.6 million transactions. Okay, so we're a lot of people transacting in that day, and we can see that the buyers drove the price up. In other words, we had a lot of interest on this day. Let's see how much interest we had on the next day. On the next day, we had even more volume. 9.7 million transactions. We had a green candle. We can see that buyers drove the price up. In other words, the price closed above its opening price. This is what we want to make money off of as traders. And remember, a trader is different than an investor. A trader takes advantage of short-term price movements, day traders like myself, whereas an investor is investing for the long haul, which is typically considered more than a year. Okay. Right now, we're talking about how to identify these stocks. So we've gone to Market Watch, we've gone to the calendar. You guys can see that just because they're listed here doesn't mean they're going to meet our price criteria. Let's do this one, LUD. Let's see if we can find some that's a, well, here's one that's $6, not quite what we would call a penny stock. Let's see if we can get lucky and find, what about this MLEC? MLEC. Not a penny stock. Let me
Is it
show you.
LUD or LUC?
Say again?
You said LUD, D is a dog?
No, I think I said MLEC. Yeah, MLEC.
Okay.
I think this was the ETF, so I'm not going to play with that one. Let me show you another place you can go. Watch this. I'm going to go out to the internet, and I can go to all I have to do is a search. I can do top gainers or something similar to top gainers stock. That's close enough. I like to use Yahoo. The sponsor stuff, go right past that. TradingView is a good one too, but Yahoo Finance, this is the one I'm usually typical that I'll go. And they'll show you this pre-market. Let's say if you're waking up, you wake up, early bird catches the worm, and you're up before 9:30, and you want to say, who's moving pre-market? You can go here and it'll show you, here are the prices here, of course. These aren't penny stocks, but sometimes you can get lucky and they'll give you penny stocks. I think you may be able to do this via price. So if you hit price, it should go, okay, that's high price. If you hit it again, it should give you low price. Okay, the lowest price is only $5.40. So you can do a search that way. Now, here's going to be our preferred way. Anthony and I, this is what Anthony and I are going to do. We're going to go to finviz.com, and you go to the home page, and up here at the top, you have top gainers. They'll have the volume. You normally want to see huge volume. I'll say in the millions. That lets you know you're going to have liquidity. Okay. Do we have any penny stocks? So by SEC definition, here's one, Lucy. Here's one here, MITQ. But let me show you. Let's click on that one. Okay, what is this garbage here? Let's see if I can close that and get it out the way. Now look, here's, okay, now I have a subscription with this. So let me tell you about this one. I actually have a subscription to it, so I get real-time quotes. If you do not have a subscription to this website, you are going to get what are delayed quotes, and they're typically 15 minutes delayed. You're not, I'm not saying that you can't get in and make profits on those. You can, but you're going to have a better opportunity if you get a subscription for this. Let's see what the pricing is right quick. And I do have the elite version, so I'll pay basically $25 a month. Now, I'm not sure if you get a discount if you purchase annually, but that's something you guys can check out on yourself if you do not want to deal with delayed quotes. You're going to be in a bad position. In other words, the money has probably already been made if you're dealing with delayed quotes, but that is not always true. Anthony, do you have a paid account?
No, I don't.
Okay, so Anthony uses it. So what I'm saying may not be necessarily true. I know I have a paid subscription, so my prices are real time. Anthony, did you want to add anything to that? What I just said about using FinViz?
No, I just really use it in the morning to see, like you said, who what stocks is moving, like you said, pre-market or the
Yeah.
day before. I kind of use it like that.
Okay. Okay. All right. So let's go back and see where we are in the presentation. Now, Elijah, do you have any questions? All right. Let's talk about the strategy then. The criteria we've already said. Now, this is me now. I'm not saying you guys don't want to do anything different, but I only deal with NASDAQ listed penny stocks. Okay. Ideally, for me, in terms of definition, now the NASDAQ, the SEC classifies stocks that are less than $5 as penny stocks. Okay. For me, I may go up to $2, but I'm really looking for stocks that are under a dollar. Okay. Although I have bought stocks that are around that are in the dollar range. Okay. Average volume over 500,000 transaction a day. And I want to find when the earnings reports are due. Okay. This is where the homework comes in. I want to make sure they meet my dollar criteria. If you want to go $5 up to $5, that's up to you. You have small accounts, you probably want to do what I do, and I'm just greedy. So, or let me say it like this: I want to maximize my potential for profit. Now, when I say profit, I'm talking about percentages, right? I'm not talking about dollar values. I'm talking about percentages. I hope you understand that. I want at least 25%. Now, having said that, I'll get what I can take, but I'm hoping for at least 25% or more. I want to get in before everyone else gets in. So I'm going to do my homework. I want to buy before the earnings reports come out. And then my hope is that when the earnings reports are given, I'm sitting right there in front of my computer, and I've already owned the stock. I want to close it, ideally, and I'll talk about strategy in a minute. So we talked about the research tools that we use. I didn't mention NASDAQ. Here's another one. Let me click to show you. Okay, I thought I could click. Let me see how that works here. There we go. They have an earnings calendar. This is Sunday. Of course, there's no report. Let's click on Monday. The only thing I don't like is they don't give you the price, the closing price. So this one's going to come out WDS. Let's click on it and see if it gives you the price. Okay, they do give you the price. Here you can see they give you the price, $16. So that wouldn't meet our criteria. Now, some of you with the bigger accounts, you may want to invest in these because you have more money to purchase shares. So you may want to invest in those. Me personally, the risk versus reward doesn't meet because they're not going to go up that much. If you look at a percentage increase on a $16 company compared to a company that's $1, there's not going to be any comparison to me. Percentage change, if you go up, 10% on $1, that's 10% already. What if you're at 50 cents, right? And you go up 10 cents, what is that, 20%? You can see how the numbers are in your advantage when the price of the stock is lower, okay? All right, so this is another website that you can use, but you still got to do your homework to make sure that they meet your dollar value criteria. Then you have to find out, this is going to tell you, let me tell you this too now. Some of these earnings report dates are estimate. In other words, they'll use some type of algorithm based on reports that they have given previously to predict or estimate when an earnings report is coming. I have invested in some. I was expecting an earnings report to be given, and the earnings report was not given. Okay? So many times these are going to be estimates. Now, what you have to pay attention to is whether it's going to be, whether or not they're going to give that pre-market, like over here, these times, they're going to tell you, if you go down here to the legend, the ones that look like the sun are pre-market, the ones that look like the moon are after hours, that's after 4 p.m. They're generally going to be at 4:05. And then, of course, this one, time not supplied. So, hey, you're just going to be on the lookout. But personally, I like the pre-markets. I'll do aftermarket too, but I really like the pre-markets because pre-market, what? After the pre-market is the regular market, and that price may be driven up even more during the regular market. But you want to watch it. Let's try this one. How about FDS? Ooh, I'm definitely not going to do that one. That one's over $400. Again, you can see where the let me tell you what, let's try something else. I'm trying to give you guys, and sometimes you got to use your own intuition and or research skills. Let's try Chat GPT. I just purchased a subscription to this today, so I'm hoping to get some benefit out of that. This is so I have a paid subscription. You guys may see something different than what I would see. I would say list penny stocks, which have upcoming earnings reports. List penny stocks which have upcoming earnings report. Let's see what we get. I don't know what I'm going to get.
We will come down hard and come down fast. So I think we have some interesting times over the next 48 to 72 hours.
And last word to you, James, you concur with the general's assessment?
Okay, this tells me places. Let's see. Okay, here they say you can check their earnings dates via those calendars. In other words, I could go out and find this company's website, and maybe on that website, they will list when they're going to have an earnings report due. So this isn't really giving me what I wanted. They're giving me places I could find them. So that's not a good, but sometimes it's determined by how you list penny stocks, which have upcoming. Let's see if I could. How about are there any stocks under $5 which report earnings the week of June, what is it, 20, what's the day, 23rd? Are there any stocks under $5 which report earnings the week of June? Let's try that. Well, I can see Chat GPT is not going to be a good source for that. But I think you guys have enough to work with. That FinViz is one. That scan that we did with Market Watch, of course, you're going to have to do a deeper dive. Sometimes you may have to go to the website. As a matter of fact, let's go back to that. Now, down here, you can actually, sometimes they'll have a link that you can click. I don't see that they have them here. They also tell you whether or not, if you look at the time, they'll tell you whether or not it's going to be pre-market or during market. We didn't find any on this date. I did have a few. Let me guys show you a few that I actually did that actually did not report. Go here. Let's see if I can find, no, not trade, but yeah, here's a few here. This MPU, you can see I bought it. Now I did make it was some chump change, but here I bought it at 84 cents. I bought over 1,000 shares for 84 cents. And let's see where I closed at. Up here, I closed at 85 cents. I mean, so I made some chump change, but it wasn't, they actually did not report. I was expecting them to report and they did not report. Here's another one, LVO. As a matter of fact, you guys can write these down now because they're going to report. These were estimated report dates, I'm assuming. I bought this one at 86 cents. Also over 1,000 shares. I think this one I may have lost. No, I almost got I may have lost I don't know. I basically sold it at about the same amount, so I didn't make anything on that. Whereas here, well, here was one that was actually over. I actually spent $1.58 on this. Now, if you do your homework, some of these just interest me because of the products or services that they offered as well. I thought that they would have market demand, but you can see that I sold them because I don't hold them. Okay. I was looking for an earnings report. The earnings report did not come out. Okay. I'm not going to hold those stocks. I will only hold them if I know that the earnings report is going to go out. And the reason I don't hold them, let's say if I held them to the next day. Okay. That's where the crystal ball comes in. I don't have one. The stock price could have dropped, and there I'm losing money. I only want to invest in stocks and trade in stocks. Let me be specific, where I can actually see what the price is doing. So in other words, it's during market hours, pre-market, or after hours. I don't want to be on a daily chart. I want to be on, this is the one I want to be on, the one that says 1 minute. I want to be on the 1 minute. These are not the indicators. These are my indicators that I'll use for my daily charts. I'll go up here. Here's the one that I'm going to use for my day trades. I even named it. This is the study I'm going to use. I call it day trade. This is the one that you're seeing now, my standard study, which I will use on my daily chart. Here's my day trade. Here's my MACD, moving average convergence divergence. Look at my settings. Here's my fast moving average, which is 3 candles, 3 1-minute candles. Here's my slower one, which is 10 1-minute candles. And here's 16. This is the average of the 3 and the 10 for 16 candles. Okay? Here's my relative strength index, or RSI. The standard value is 14. Here you can see I set it to 9. The 70 and the 30, I'm not going to change those. Always going to operate it on the closing price for that candle. I'm going to set mine to exponential instead of that Wilders. I'm going to set both for exponential average. Those are the more recent prices. And I do have a video for this. I don't know if I'm going to show that to you. I think all of you've seen that video anyway. But this is the point I want to make out. Here, this is historical data, right? This is going to look totally different during the trading market. In other words, the gray area is after hours. The black area is during hours, right? So pre-market, after market, in Thinkorswim, the gray area. Okay, if this is how you have your chart set up, is black and gray. The gray area is pre-market, after market. The black area of the chart is during the regular trading hours. All right, at 9:30, when 9:30 starts, these candles are going to move from left to right. So this is at 9:30. Here you can see I got a few up here. 9:31, you can't see those, but there's these little gray lines here, which means there was no price movement. If you see a candle, that means that the price changed. Here it started at a high price, it went to a lower price. Here it started at a lower price, went to a higher price. Let me make that a little larger so you guys can see it. Go back over here to 9:30. Here's 9:30, price dropped. 9:31, it stayed at $1.35. It didn't change. 9:32 went to $1.34. It didn't change for that whole minute. Excuse me, this is 9:33. 9:34, it opened up at 134. It went as high as 135. That's only 1 cent. That's a joke. You're not gonna make it. You didn't make any money there. Here it opened up at 134. It went as low as 133. That's a cent. You lost a cent. That's not a big loss. You know where I'm going? This is how you interpret what's happening in each minute. So on this day somebody help me out, would it have been worth investing? And I haven't looked at the whole chart. Let's say from 9:30 to 10:20. Would I have wasted my time or would I have made any money?
Kind of waste your time on that one.
Yeah, I'm wasting my time. Here's how you know you're wasting your time without even really looking. See how the green line and the white line are horizontal. And they are very close together. You're wasting your time. Okay? Here's another thing I want you to realize. I want you to notice that the candles are right over the averages. If the candles are right over the averages, that's another way to determine that you aren't making any money. You want to see the candles move away from the averages. Let's see if there is a place here. Well, there's a few places. I mean, here you could have made what? Let's say if you got in here, 131, and went here as high as 135. That's 4 cents. That's not too bad for a stock that's, over $1, in between $1 and $2. You're not making a whole lot. Hey, but look what happens real quickly. As soon as you made it, look what happened. You lost it. Here's the point I want you to get. The point I'm trying to make is that you are going to make money when the candles move away from the averages. You're going to make money when the averages are steep. This is not steep. That's a small hill. These are small hills. Wasting your time on this one. Let's go to one. Let me show you one. Here's one I like to trade. Now, I actually do options. Not going to make any money here. I actually lost money right there. That's sort of steep. Look at that. We went from $3.17, $3 and let's just say $18, all the way up to 300. What did I just say? 318 to 326. They're about that $8. It's not bad. I don't know what percentage that is, but I trade options, so that's big money for me. $8 price increase.
Tesla?
Oh yeah, if I can get an option on that. See, the options real quick, let me show you this. If I'm trading, now when you guys get good at this, I'm gonna start teaching options. Okay? Now watch this. If you want to get into Tesla, you got to spend $300 and something per share. Watch this. Let's go to trade. I'm gonna put in Tesla. I trade weekly options. Let me see. This is the next Friday, so I'm gonna be trading on this one, the 27th of June. Watch this. I'm gonna go near the money. I'm only gonna trade near the money. They're gonna be the cheaper. I can get in. I can control 100 shares. Watch this. I can control 100 shares for $960. Okay, whereas you're gonna have to spend over 320 something thousand dollars to control the 100 shares of Tesla. I'm only gonna spend $960 to control the same amount of shares as you. Now, if that price goes up $8, I'm going to make in the thousands of dollars, okay? Now, I don't know if I'm going to spend this. Let's say if it goes up, let me do the math for you right quick so you guys can understand the power, what's really going on here. So if I buy it at $9 and it's really going to be the mean between those two, the buy and the ask. So I can buy it for $9.50. So 9.5, and I said what, $8? So in other words, I'm going to buy at $9.50 per contract. That's 100 shares. I'm really going to spend $950. But that's just use the price because I want to show you what's going to happen here. So the price goes up $8 on a call. You can see I'm on a call and I'm buying a call, so I expect the price to go up. I can clearly see on the chart it went up $8. So $9.50 plus 8, that's $17.50, right? So I bought at $9.50. I'm going to sell at $17.50. But watch this. How many shares I got? I don't have one share. I got 100. Guess how much money I just made?
That's 7.
$1,750. How much did I invest?
900.
950. So I got 1750 divided by 950. I just made 84% on my money. That's why I trade options. Now, having said that, you can lose it. That's what you call the power of leverage, okay? Now, our good friend there, Andrew, he trades options. So he's the big wig on the options. He trades the options. I just got into it. I've traded options before, but when I traded options starting back during COVID, I did not know what I know now. Now I know I can day trade options. Okay? So I'll go in and let's look at this one starting at 11 o'clock. From 11 o'clock to 12:54. Now, I wouldn't have stayed in it that long because I can see if I blow this up. I'm only going to stay in the trade. I said 11 o'clock, right? Let's go back and find 11 o'clock. When was 11? Here we go. Well, I wouldn't have got in there because my white line is below. Here's what who can tell me when I would get in this trade? Let me blow this up a little bit. When would you get in this trade? Somewhere, I'll give you a hint. It's not going to be here. Warren, when would you have gotten in this trade?
There's a line separating when I had some space on that average there. So that
Here?
no, come back a little bit.
Where?
Right.
Here? Or over here?
No, right at the drop there. You got that big drop right there afterwards.
Here?
Yeah, right after that, yeah. Because that's where your line separates your average.
Okay, what color candle is that?
It's beginning to turn green right there.
Okay, I'm not sure if you're looking at what I'm looking at, but here I'm looking at a red candle, which means that the price dropped.
Yeah, it dropped there, but it starts to turn green right next to it. And it's also got some space on your average there too.
Okay. Okay, okay. Now here's the trading strategy. You and I only want to trade when the white line, which is the faster moving average, is above the green line. Clearly here I can see that the white line is below the green line. I'm not getting in that trade. Okay.
Okay.
Now, let me tell you this. Now that I've expanded it a little bit, I'm beginning to see that maybe I would maybe I wouldn't have got this trade because I'm looking at this white line is real close. Now look, here I could have made some money, but it would have been real quick. Here's ideally when I would have gotten this trade. I would have only gotten in this trade right here. Okay? At 11:11. Now, I'm looking up here, the 1, 2, 3, 4, 5 lines down. I'm looking right here, but I got to put my candle, I got to put my cursor here. I could have gotten that. If I was quick, I could have got in at $319.32, somewhere around there. And as long as the white line stays above the green one, I'm going to say to about, I mean, here it stays there. Here it stays there, but it's a price drop. I'm not trying to take any price drops. I want to get out here. And my MACD confirms it. If I look down at my MACD, look, my MACD went horizontal. That would have scared me. I always want to be going uphill with my MACD line above my signal line, the yellow one, the blue line. Look, I only want to see green. As a matter of fact, I only want to see bright green. I don't want to see dark green. Dark green means the price momentum is decreasing back toward where it started. Right?
Okay.
Then it goes red. I definitely, man, I don't want to be down here when it's red. See, look, Warren over here. Look at the MACD. What color is it? What color are the histograms?
It's red at 11.
Yeah, we don't want to be down there. We only want to be when it's green. And ideally, we only want to be in when it's bright green. We don't even want to be in. Now, there are exceptions to the rule on this. But if you want to play it real safe, we only want to be in on the MACD line when it is above the signal line, and we can see green in our histogram, ideally bright green. Let's see, can we see it when that histogram is large? Let's see if there was any point during the day where that histogram is large. In other words, we got steep inclines. All right, this was not too bad. Look at that separation between the blue line and the signal line. Same thing here, separation, right? I hope you guys are sort of getting this. There's different ways of saying the same thing. Let me say the same thing in different ways. My white line has separation from green line. It's the same thing as saying is that my candles are moving away from the white line. Okay? It's the same thing as saying that my histogram is getting, my histogram bars, these little bars, are getting higher and higher. Look at this one. It's like walking up a mountain. Look at the separation of the candles. Look at the separation of the white line from the green line. Separation is key. That makes sense? Let's see, can we find, okay, I definitely don't want to be down here. If on the option, I've lost, man, I'm toast. I've lost just about everything. Here's a good little run right here now. You'd have lost here if you'd gotten scared. You can see it turn back up. Those are determinations you got to make. If that white line crosses beneath the green line, you're toast. Okay? Sometimes it'll turn down and turn back up, but why take those chances? Sell before it turns down. I won't even let my white line go horizontal. I only want to be walking uphill, okay? See the separation? Remember, for the red candles, here's the separation. We got to look at the bottom. That's where the close, that's the final price at the end of 1 minute. See how it starts at the average and it moves away from the average. Then it has that reversion to the mean. It comes right back to the average. It travels along the average, goes away a little bit, comes back, goes away, comes back, goes away, comes back. That's life. That's how prices move. They call them, they oscillate back and forth like water waves. They oscillate. These are called oscillators, okay? Now you understand why that term is important. Ooh-wee, right here we made some money. Look at that. Now those candles move away from the average, okay? Look at the separation between the MACD line and the signal line. Look at those huge histogram bars. These bars are the difference between the blue line and the signal line. We want to see steepness, right? Look at the steepness of this white line compared to, say, the steepness of this line here. We want steepness. MACD gives it away, even the RSI. Look at that steepness. We went from oversold to overbought real quick. Look at the steepness. We went from way below 30. This is way down here at, I don't see my values for my, oh my God, that's way at 6. Look at that. That's way below 30. So we know that's too much selling right there, right? And normally if there's a whole lot of selling going on, that means that the sellers will at some point be exhausted. That's when the buyers come in. Boom. Look at what happened. Real steep. That price shot up, man. Look at those long candles. 2 successive long candles. Let's see the price difference. That's 320 all the way up to 322. Up. That's about $3. For an option guy, that's a lot of money. Okay? Comes back to the average, goes away, comes back, rides along the average for a minute. You aren't making any money right here. Let me slow down. Any questions? You understand? I hope you guys understand why the candles are important. There are a lot of information in the candles. For us, we're looking for relatively large candles with height and a lot of range. What is the range? It's the difference between the high price, which is here at the top, and the low price, which is here at the bottom. Okay? We want separation between the white line and the green line. We want separation between the blue line and the signal line of the MACD. We want to see steepness, upward movement of the RSI. Make sense? Just different ways of saying the same thing. Here we got red histograms, or the blue line is below the signal line. A lot of selling going on. Look at the RSI. It's moving down. A lot of selling going on. RSI moving up. when the price is going up, MACD is moving above the signal line, the histogram is green, the brighter, the more the price movement upward. Price movement still going up, but not as fast. Then it goes up a little bit again. Then it goes up, but not as fast. Price is moving down. When you walk downhill on the MACD, you're losing money. You better get out. Okay? We can see with our eyes with the chart what the price is doing. Price is going up. We buy in. We get out. Clearly, I can see that the MACD turned down here at about 356. I'm getting out. I'm not going to stay there and lose that money. Even though it turned back up, I'm not going to take a chance on it. Well, sometimes I do, but generally speaking, you don't want to take those type of chances, okay? You got to get more experience to determine when you want to get in, when's a good time to get in, and when's a good time to get out. Let me slow down. Any questions? All right, here's the strategies. I just talked about it. You want to compile your list of tickers. You've done your research. You found out when the earnings dates are. You determine whether or not it's pre-market, during market hours, or after market hours, so you know when to be in front of your computer. That's very important. You're going to invest small amounts. Let me give you an example. Let's say if you have $500 in your account. You do not want to invest the whole $500. I mean, you can, but you probably shouldn't. You'd probably say, I want to invest $100 in 5 companies, 5 different companies. Okay? Or you may want to decide, well, I don't want to put up all 500. I just want to do 250. Okay? Because there's things that you can do. Let's say if you get into trouble, there are things that you can do to mitigate your loss and potentially make a gain. You could buy in again at a lower price if you know the stock has bottomed out. In that case, you got to know what you're doing. You got to really be sitting there watching those charts. That means that your average price comes down. Let's say if you bought, say, for example, $100 worth at $1 and the price drops to $50. That means you can buy $100 worth. Now, what did I just say? Let's say a dollar. Let's say you bought $100 worth at $1. That's 100 shares. And the price goes to 50 cents. I'm just making up something. Well, you still got $100. Now you can buy 200 shares. What you've just done is now your average price is the average between $1 and 50. So that's 150 divided by 2. Your average price instead of $1 is now 75 cents. Okay? Instead of waiting for the price to go back over $1 so that you don't lose anything, you just need the price to go over 75 cents. That make sense? So there's different ways to do now. There's different ways to mitigate your losses and potentially make some profits. But you got to know what you're doing, and you got to be sure that that stock is moving in the price that you expect it to move. And so that means that you have to really be sharp in the technical analysis or chart reading. Okay, what are we going to do? We're going to set up 1-minute time intervals because we're sitting there in front of our computers. We've already bought in. Let's say we've already bought in. We're just waiting to sell. We're looking for that price to shoot up. We're looking at those indicators, the ones we've just looked at. And we're going to sell before that price drops. Okay, sell for profits before the indicators turn against you. We do not. Now, this is up to you, but typically for me, because of experience, I don't hold stocks. I don't know what they're going to do the next day. I don't want to guess. I don't have a crystal ball. I want to sell because I can always buy in the next day depending on the indicators and sell before the indicators turn against me. I do not, I'm going to keep stressing that, do not guess what directions prices will move when the trading day has concluded. Watch with your own eyes, sell before the trading day ends. Good luck if you do it any other way for a momentum stock. Now, if it's a stock worth investing in, yeah, go ahead and hold it. But these momentum stocks, let's go back. Tesla, everybody, hey, Tesla's big dog now. They got Waymo. What's that? Is it Waymo? Not Waymo, that's Apple. Tesla just came out with a self-driving taxi, right?
Pony.
What is it?
Pony.
Is it called Pony?
Yeah, it's not them though. It's China. It's got Pony. Pony.
No, that's not Tesla. Tesla, I traded Pony one time. That's a Chinese company. I'm talking about Tesla has a self-driving car that they have, I think last week or the week before, debuted in, I want to say Austin, Texas. We can do news on it. There it is. Tesla launches its Austin robo-taxi today. That was, well, that wouldn't be, let's see what day that was. Wait a minute. They got it today. That's Sunday. That debuted today in Austin, Texas.
That joker
Okay.
might jump tomorrow.
Yeah, you may want to watch this bad boy tomorrow. I don't know. In one respect, Tesla has been trying to convince bearish investors for years that it is more than a car company for good reason. The car business is characterized by low profit margins, low valuation multiples, brutal competition, and cyclicality. Okay, I'm going to be watching this one tomorrow to see what happens. Maybe an opportunity for an option trade on this one, Andrew. But you guys see that these are the catalysts, right? This is the potential. Now, is it going to move in a positive direction? Who knows? That's up for you to determine. Some of this you have to use your own judgment to determine whether or not the stock's going to move in one direction or the other. But for me, I'm going to watch it with my eyes. I'm not guessing. Okay.
Yeah. Because I was looking at that as well too. With all this stuff going on, you have no idea which way it's gonna go.
I can tell you, let me give you history. I want to be very transparent with you guys. I did one of those biotech stocks that was doing research, and I read something where I already given you the example. This company had one patient in a study. It was like a phase 1, 2, and they actually cured a person of cancer. And I was like, oh my God, and it was one of them cheap penny stocks. Sure enough, I got in at pre-market. I was up $4,500. That was pre-market. I'm like, man, I can't wait till 9:30 comes. This is gonna go through the roof. And Anthony, I think well, let me see. I don't remember if you were watching that one, but I held that because normally my strategy is I'm going to buy pre-market, I'm going to sell pre-market.
Yep.
That's my new strategy.
Yeah.
That was not my strategy then. I held that sucker, and man, as soon as 9:30 come, that price started dropping.
Mm-hmm.
I lost my 4,500, and I'm like, oh, it's gonna turn around. I got cocky with it. I said, man, this sucker gonna turn around. And that sucker kept dropping. I was like, why is this? And I was shocked at that time, and I didn't act, and I like held it. To the next day, I think I lost $8,000.
Mm-hmm.
Okay, so I learned from that. I didn't get upset about it. I'm like, okay, I don't hold stocks anymore.
Yeah.
That's why I'm telling you guys that. I'm telling you from experience. You don't have a crystal ball. You don't know what that stock's going to do, and it doesn't make sense to take a chance on it. Watch it with your eyeballs, okay? And if you're a newbie, practice with paper money before you use this approach. Let me tell you the truth about this, and Anthony can attest to this. We trade every day, and I think Andrew probably trades every day too. If we lose money, it's not because of the strategy, it's because we're greedy.
All the time, yeah.
If we lose money, it's because, okay, we got $150. We're not satisfied with that. We want 500.
Yeah.
We got 1,000. We're not satisfied with that. We want 2,000.
Yeah.
You got to be you got to take what you can get. If they only give you 100, take it. Other part is, if you go to the well too many times, you know what's going to happen. You're not going to get wet. You're going to get burned.
Yeah.
Set your profit target, get it in little chunks, and look for that steepness or separation. You do not want reversion to the mean. If the stocks or the candles are coming back to the average, you've lost money or you're going to lose a lot more. Okay?
Yeah.
The strategy, to me, with the exception, there is one exception. See these large candles? They can also be red. These are 1 minute candles. So within 1 minute, and actually shorter than that, it could take 1 second. In 1 second, you can have a large drop in price. They don't happen often, but they can happen. You got to hit sell real quick. Okay? Now, here's the skinny on it. Sometimes you'll do that and it'll jump right back up. But we don't want to take any chances because look, let's say large red candle comes up, we sell, then it turns back up, we just buy back into it and ride it back up. Okay? Do not be emotional about trading. You are going to lose money. Okay? The trick is to limit the losses and keep the gains. Does that make sense? I hope that makes sense. Lose money, don't get upset. Keep trading. Just make sure that the signals are in place. Okay? Here's another thing I've seen people do. Now, Anthony, I'm going to tell on you. Anthony used to do this. He'd get in, he'd see that white line turning up, and look, there's profit there. And he'd say, man, I'm not missing that profit. And he'll jump in. Now, this is an example. That white line will approach that green line, and then it'll turn back down.
Yep.
And he's already jumped in the trade, and he loses money. You want confirmation. In other words, you want to see the white line cross the green line and maybe wait 1 or 2 more minutes. Each candle is a minute. Okay, you're in. Now you know the trend is upward. Up here, it's turning horizontal. Uh-oh, I got to get out.
Mm-hmm.
Okay. But it's also true that sometimes this will turn down, then it'll turn back up. But hey, if it turns down, sell. Before it turns down, sell. If it turns back up, buy. You gotta
I would say don't try to get all the gain. You ain't gonna get all the gain because trying to get all the gain, you're gonna end up taking the L.
Yes, if you try to get all your profits in one fell swoop, you're gonna probably lose money. Okay. Now, here's the other side of it. Then I'm gonna let you guys go here. Here's another way you can lose money. And this is where the practice comes in. We use Active Trader. In other words, we're going to have this set up. We're going to have all of these up here. And sometimes you have to put them in there. So you can go to this gear. And let's say if they weren't in there, because normally they aren't, I'll go here and I can take buy ask and I can add it over here. I'll take buy bid. I'll grab it. I'll move it over here. or I could just highlight it and hit add. It'll come to the other side. I can move it up or down depending on where I add it, where I want it. I can do the same thing with sell ask and sell bid. I'll put it in there. Here's why. This is going to be moving real fast sometimes. Market's open, it's moving fast. I'm normally, if I want to get in, I'm going to hit buy ask. But here's the thing, I'm going to be looking. Let me show you where I'm going to be looking at. And Anthony, I don't even know if I told you this. I'm going to, let me move this out of this in my way here. Something's in my, you guys can't see it, but look up here where it says B and A. I got my eyeballs right here, right? And you got to be quick. I can either come in. Number one, I want to make sure that the separation is not too much. Here I can see that spread between the bid. That's what the buyers want. Hey, I want to buy it at this price. And the people who already own the shares, they're like, I want to sell it at this price. Here you can see there's a 10-cent difference. So you got to ask yourself, am I willing to take that 10-cent difference? Or do I want to come in with everybody else?
Yeah.
If it's moving quick, I'm going to take what the sellers are selling it at if there's not a large spread. Now, 10 cents on a $300 and something stock, that ain't no money. So I'm going to go buy ask. That's what the sellers are selling it for. That's going to get me in immediately because that's what they're selling it for. If there's a large spread, man, it could be 90 cents. No, I'm not coming in at 90. I'm going to get in and what the bidders are. I'm going to come in with everybody else, and I'm going to hit buy bid. But I got to wait until the price comes to that amount. Now, here's the skinny. It may not come to that amount, and the price may continue to go up, and I got to make a decision. I'm going to cancel that order because I've already got a bid in. I have an IRA, so I already have a bid in. If I hit buy bid again, I may get twice the orders that I want. I don't want twice the orders. I just want the shares that I want. In this case, let's say if I wanted 470, I don't want 940, so I'd have to cancel. My cancel's not highlighted, but I can hit cancel, and then I hit buy bid again. Or if I want to get in quick, I can hit buy ask. If I don't care what the price is and I just want to get in, I'm going to hit buy market. Sometimes this is something that you want to do, especially if you got a large account and stock's moving fast. You got some good news on it. You want to get in quick, buy market. But normally for me, I'm going to do buy ask, and here's why. Or buy ask or buy bid. It's just really just your choice. But here's why. Sometimes if you hit buy ask and there's a large spread, that price may go down, and now you got to wait for it to come back above the price that you bought in at, and it may not do that, and you've lost money from the jump. Okay? You can also move in here. Typically, what I will do, another strategy for me is to come in. Now, this will be moving. You're going to see all kinds of numbers here. I'll normally come in, whatever the current bid is, I may come in 1 or 2 sales below it. Okay? The green side is the buy side. Let's say this one is being populated. Everybody's in right here. This is the current bid. I may come in to be on the safe side. I may come in right below it. Okay? 1 or 2. And sometimes you can come in even lower if you think it's going to drop. Where you're going to get that indication from, you're going to go to level 2. You're going to see prices here. Sometimes you'll scroll down. And well, I'll see a low price. Now, this isn't guaranteed. Now, when I'm telling you here, you guys are going to need to stay with me a little bit more and probably trade with me some to understand what I mean by using the level 2 quotes to understand where you want to come in at, because many times these prices here will be lower than the current bid or ask price, and you got to wait. And this, especially if they're large orders, I guarantee you they're going to come back to fill these orders.
Yep.
Okay? So there's a lot more to this. If you guys just listen to what I'm saying and not understand that there's a whole lot more to this than what I'm telling you, you're going to get in and you're going to get burned. Okay? You're going to come in, all the indicators going to be up, and then you're going to look at level 2 and you're going to see, oh, it's coming back down to meet that price. And as the price goes lower, what did I just say? You're going to have other people that are going to come in lower than that. They're going to follow the crowd. They're going to come in at a lower amount. Then you're going to have people come in lower than that. And then guess what? The price is going to continually go down. And you just lost money. Okay? There's more to this than meets the eye. So you guys got to stay with me. And ideally, you guys are welcome to trade with us in the mornings as well. Okay? See how it looks in real time. Anybody have any questions? I know I sort of kept you over here. I probably need to start extending this to 2 hours.
Yeah, I'm also looking at your YouTube page also. Do you have one of your do you have your studies listed on one of these videos here that you got on your new page? You know, where we did the RS, the MACD, the color, and all that stuff. Did
Yeah,
you?
there's one on there. Let me
Which
show
one
you.
is that? Do you know?
Let me go there and find it. Let me get out of this chat GPT.
I see Andrew scratching his head on one.
Andrew, what you looking at tomorrow, man? You got anything in mind?
I really don't have nothing in mind. I'm really trying to see uh how this thing will pan out with all this
With the
whether it's gonna be
bombing.
retaliation going on. So is so I really want to see what's gonna happen overnight and see what the other I just really want to see what's going on, and then like you say, just prepare from there and see about the momentum trades going on
Yeah.
and see what I can get in and get out of, especially at that 9:30 to about 10 o'clock, 10:30.
Mm-hmm.
Catch some of that.
Yeah.
So that's what I don't really have nothing in particular I'm looking at though.
Okay. Okay. All right. Warren, there's a couple of them you can use. You can use this one here, using moving averages
Moving,
and the
moving average.
MACD for maximum profit. You can use that one. I think in this one cancels other, this is a short one where I think I talk about those.
Okay. Okay, I got him. Okay, I got him.
And the other one, I think examining market depth is one that I use too
All right.
to do
Yeah,
that.
because the other ones that are on YouTube, these guys are trying to sell thumb drives and everything else, and commercials are coming in and crap, you know. So, all right,
I'm
I'll
gonna
look
tell
at
you,
those.
yeah, I'm gonna tell you another thing too. I went out, and I'm sure I've told you guys this before. I've spent a lot of money taking classes. I looked at a lot of YouTube videos, and I've tried a lot of that stuff. And all I can tell you is I've lost money.
Okay.
The strategy that we are using, where we're actually not guessing, there is no guessing. Okay, you're watching the stock go up, and or you can see when it's getting ready to turn down, and you just get out before it turns down and hopefully keep most of your profits. Sometime you are going to lose, but just get back into the game, okay? The stocks goes up, they go down. You're always going to see that. Utilize the right indicators, get comfortable with that. Understand how the candlesticks work. There's a lot of stuff to this. You're looking for separation, right? You're looking for big green candles. You're looking for steepness and your averages. You're looking for your MACD. You're looking for those green histograms, especially the real bright color ones. When they start turning dark, look, the dark is always associated with price moving back toward the averages, right? Away from the average, toward the average. Sometimes you're going to move in a range. Clearly, you can see that's when the lines are horizontal, okay? There's not a lot to this. And I don't care what kind of study you're looking at. It's the same thing. It's always what they call it oscillates up and down. It goes up, it goes down. Same thing here with RSI, it goes up, it goes down. I don't care what kind of study it is, it's going to go up, it's going to go down, and or it could have support and resistance, which will be levels that says that, hey, it's going to stay around this price. Let me show you one of my support and resistance studies. I think should have, that's like a standard study for me. And I can use Tesla. Let's close this. I should have that in there as support. I think I ended up deleting those. Let me see if I got them in here. Oh, here it is right here. Oh, it's in there. I already got it in there. I didn't do anything with it. So let's go ahead and I gotta minimize it. Normally to see those, you gotta, well, actually they're not showing up here. Let me go to the daily. Normally that would show up, those would show up, and it's probably not showing up because it's not a trading day. And I think for the benefit of you guys, I got rid of those. So let's see if I have another one in here with who else? QBTS. Here's another one I'll trade. Oh, okay. Here's support and resistance right here. See these green and red lines? Let me tell you how I got tricked on these, and I'm just trying to give you all of my experiences. I'm not saying they're not cases when they work, but this is like what they call a support. Okay? In other words, the price, it'll touch the support and then it'll bounce back up. In other words, it may not go below that level. So this price support looks like 1565. Here's the ceiling. In other words, it goes to the ceiling, it bounces off the ceiling, and it comes back. Okay? This is like a floor. This is like the roof. If it breaks through, typically it'll keep going, but sometimes it'll go up and then it'll come back down. What does that sound like? That sounds like oscillation. Up, down, up, down. Same thing with the floor, up, down. And some people will trade based on this. In other words, they're going to buy around the floor. They're going to sell at the ceiling. I use my level 2s like that. I got burned a couple of times. Guess what I do now? Who can tell me what I do? I've already told you. I use my
EMAs,
I use that, but I'm using my I
MACD.
use my eyes to look at
Mhm.
my EMAs. When I'm thinking about support and resistance, here's how I want to phrase it. I'm guessing. Because I can show you places where I done set up here and I said, oh, okay, it's not going to go below the support. And I'll be damned if it didn't go below the support and keep on going. And I lost money. In other words, I was guessing. I don't want to guess. I want to use my eyeballs. Okay? I'm not going to trade here. White line, I'm moving downhill. The faster moving average, more recent prices are above the heavier weight of prices. The green lines, I'm not buying there. Down here in my MACD, look at all that red. Not wasting my time. I'm only going to get into a trade when my MACD is above the signal line and I got green histograms. Now, having said that, here it's green. Yeah, I could have made some money here, but am I going to get into it? No, because my white line, it's moving uphill, but I'm still below my green line. Did I lose some money? Yes, I did. But I want to be safe. I'm going to get in around here. I got confirmation. My white line is definitely above my green line. I'm going to follow it up, and hopefully I can get out. If I'm lucky, I'm going to get out here. Make sense?
All right.
Okay. All right. Pretty sure this other stuff is really just boilerplate type stuff. Yeah, these are when you start getting into this kind of stuff here, we're really talking about investing. We're talking about trading. Okay. We're talking about trading in matters of minutes. How many times can we trade? You guys have already seen that. I've shown you my trading on this particular day, I had I did a whole lot of trades, didn't I? Well, wait a minute, that's 30 days back. Let's go. Well, this is the wrong. Let's do 7 days back. Okay, over the last week, this is how many trades I had. And normally that's 45. I did 45 trades. I did about 35 cancels. So I did a lot of cancels, but I did about 40 trades altogether. And sometimes that's what you got to do. Some days on one day, I could have as many as 15 to 20 trades. I'm going in and out, in and out, in and out. Okay. Any questions before we go? Warren, you had a question about something setting up. I think it was what, setting up your studies.
Yeah, I put in an awesome oscillator on there too, because it seemed pretty simple, but it also showed your lows and highs with the green involved in it a lot easier for my eyes anyway, you know.
Support and resistance.
Yeah, yeah.
Okay.
And
Yeah,
then
those, yeah.
also I started using the flexible grid, so I put in about 6 symbols on the page, and it was also able to copy the studies on all 6 charts. So that helped, and I was able to save it. I was calling you to figure out how to save them to each chart, but I finally figured it out. So
Oh yeah, they got saves here. You got, see where it says
yeah, no kidding. Yeah,
yeah, and here's where you load them. Every time you save one, you go back to load study.
yeah,
And now if you like your studies, don't hit this.
yeah.
Don't delete them because you got to create the whole thing. If you want to
Right.
not
Right.
show them, just go to edit studies. And then they have this little, looks like a little moon. You can click that and it'll hide your study, okay?
Okay.
You can also save, this is actually, you can save your study stats here. Every time you make changes to a study, save it here, save set, and give it the same name that you had as your previous
Right.
study.
Right. Yeah.
Do that, okay?
Yeah. It finally clicked. Yeah, I got it. Yeah.
Yeah, okay. Anyone else have any other questions? Okay, now this penny stocks, let me say this and then I'll close. I just, as a matter of fact, Anthony is the one, he suggested that, hey, let's start looking at the earnings reports, figuring out when the earnings reports are, and then get in on these companies. This wasn't my idea. This is actually his idea. And so for when I leave you guys today, because I actually haven't done my homework, and I think he has. Anthony, you've done some homework, right? You've already figured out what some of the earnings reports are going to be?
No, I just seen an article. Coca-Cola is coming out with a big one, but I think that's in July. But they had some big companies this week.
Okay.
You just got to look at the sites that you put up, the NASDAQ one or Yahoo Finance. Just put companies who are coming out with earnings reports, and it'll take you right there and just look at them. And the
Okay.
one with the largest market cap, you know, especially the ones that we are household names to us, those seem to really pop once their earnings statement comes out. So I would put a little bit of money on them. The thing is, they'll put the money on them before maybe not the ones that are coming out during the trading day, but if it's an aftermarket one, it might be worth it to buy some shares. Because when it hits, it hits real fast, so it doesn't give you a warning, and you'll miss out. So that's what I'm going to do. Like for the Coca-Cola one, I think that's an after hours one. I'm going to maybe buy. I don't know how much it's worth, but maybe buy some shares and see if I could get a little profit off of it.
Okay. Now, here's the caveat. I know because we trade together, so I know he's made money doing that. I made a little bit. I don't normally. I'm normally tired after pre-market. I'm like, man, I've been behind this computer all day.
Mm-hmm.
Now, having said that, I will stay there, but I normally go do my training in the evening. So I'm trying to get out. I'd rather trade pre-market. I know he trades more in the aftermarkets. But here's what I want to tell you guys, and I've already said it. You guys want to see with your eyeballs. A lot of times you'll see something on the news, or maybe your friend will tell you that something has popped. By the time they've told you that, the profits have already been had.
Yeah.
Okay, and Anthony said it best. He said they're going to go real quick. They're going to shoot up real quick. You need to be there. If you're going to get in at the bottom, ride it to the top according to what you see with your eyeballs, or take a chance like me, like I'm going to devote X number of dollars to getting in, especially here's the stocks I'm looking for: technology, and in particular, biotech. I'm also, because we've noticed too that these companies that buy into Bitcoin to add to their assets, I have no clue why they go up, but they go up too. So hey, sometimes you just got to go with the crowd, right? Because you can make money off of those stocks. But let me tell you this: do not buy momentum stocks and hold them. You're going to lose a lot of money. A momentum stock is a stock that pops on a particular day. You may be able to ride it 1 day, 2 day, 3 days, some days 4 days. Let me show you some examples. Anthony, give me an example, man. One that
How about
SBT,
Lucy?
Lucy.
HTZ, yeah. Hurts.
Let me show you guys why you do not hold these stocks. Let's go to the daily, and I'm gonna drive it home because this is why people get discouraged when they get in this game. Look at those small candles. If they don't have a lot of height, that means the price range wasn't that great. Now look at Lucy. Look at this. This is on the 16th. This is last week. June 18th. It opened up $2.30. It went as high as $2.39. It went as low as $2.25. It closed at $2.28. So it lost money that day. But on the next day, it had to be a catalyst. Look at that. Look at that gap. Look at the gap between, what did I say, 228. It closed at 228. The next day, it opened at 290. What was that, 60 something? That's about 60 cents, right? 62 cents, somewhere around there.
Yeah.
It went as high as $2. Man, you made a killing on that day, right? That was on the 20th, which was Friday. Look at the volume. Over 111 million shares. What do you think this stock is going to do on, this really isn't a good example. Here's a better one. Look at this one. 2-day pop. This was April the 9th.
That day. That's the day I was trading.
Is this the day you traded, Anthony?
Maybe not that far. I thought I was back in the. I might not have traded it last week, but I was watching it because it was on the top 10.
Well, look at this. April 9th and April 10th, you made a killing.
Yeah.
Look what happened April 11th.
Yeah.
If you would have held that, you would have lost all your money, man.
Yeah.
Listen, folks, I'm gonna let you go. I know I keep saying that, but don't hold these stocks like this. You don't hold these, man. Don't hold them. Look, this has been in a downward trend for the last year.
Mm-hmm.
You don't hold a stock like this until it gets to a point where they're actually doing pretty good. Right now, this is catalyst. We call this momentum trades. You ride them when you can ride them, and then you take your profits and you get out.
Yeah.
We'll see you guys on the next time. And again, if you want to trade with us, I'd say come in the same link. You can use the same link. Say 10, not 10, but come in early so we can make sure you set up. I'd say you can come in at say 9, say no later than 9:15 or so. Okay, because by 9:30 we're probably going to be ready to trade and not going to be able to say too much to you. But if you need to get set up, we can set you up. You can go off on your own. You can stay with us. Doesn't make a difference. You can trade paper money, what have you. But so you're welcome to come in and trade with us at those particular times. Okay. All right. You guys take care.
All right, man.
All right.